Bismillahirrahmanirrahim. Assalamu alaikum, dear viewers. Today, our topic of discussion is understanding financial statements. My name is Muhammad Ammar, lecturer IBS, Angul Campus, Kohart University of Sciences and Technology. Our lecture number 17. So, today's topic agenda for the discussion is the profitability ratio and the comparison of this profitability ratio. So furthermore, I would like to tell you about a brief intro about financial statement analysis that been started previously in our previous lectures. So financial statement analysis basically the internal and external users get benefit from this statement analysis, and we know that the financial statements are basically our balance sheet, income statement and cash flow statement, but currently we are talking about only the balance sheet and income statement, and we also taken the example of basket vendor for the year 2007, which we previously discussed in our slides. Now we are further moving to find the profitability ratio regarding this basket vendor example. So in this current slide, we can solve through formula of the profitability ratio and putting the values of the basket vendor balance sheet and income statement for the year 2007 given example in our previous slide, and also we can compare the ratios with the industry average. So you see the profitability ratio. First one is our gross profit margin, or this profitability ratio is also known as income statement and balance sheet ratio, because we clearly see that gross profit margin is equal to gross profit divided by net sales. So the gross profit divided by net sales, and these figures being taken from the basket vendor for the year 2007. So for gross profit, they have taken $612 and divided by 2211, which is net sales. So we can get the answer, which is 0.277. So what does this indicate? So this indicates that the efficiency of the operations and firm pricing policies. So 0.277 indicates the efficiency of the operations and firm pricing policies. Now we could compare this 0.277 ratio with the industry average ratio, whether the basket vendors is good as compared to the industry average or not. So we say gross profit margin by comparison with the industry average. So the column here shows the different years 2005, 6, 7, but basically we are now talking about the year 2007 only. So in this we get the ratio 27.7%, previous slide that we checked, and on the other hand side you see the industry average has 31.1% gross profit margin. So basket vendor has a weak gross profit margin as comparison to the industry average ratio. So they're given the trend analysis of the gross profit margin, and they're given the chart. We can see in comparison with the industry average. You can see on the horizontal axis the years are given 2005, 2006 and 2007, and on the vertical axis the ratios values given in the percentage. So the blue line indicates the basket vendor and the red line indicates the industry average. So you can clearly see that basket vendor is getting below yearly from the industry average, right? So the next ratio for profitability ratio is the net profit margin ratio. So this ratio also being called the income statement and balance sheet ratio. So we see the net profit after tax divided by their net sales. So these both are being taken from the basket number for the year 2007. So we see $91 divided by 2211 and those are the net sales we also discussed in our previous slide. So we get the answer 0.041. So what does this 0.041 indicate? So this indicates the firm's profitability after taking account of all expenses and income taxes. And we also see to compare this ratio with the industry average ratio to know about that the basket number is going good or it's been on average as compared to others. So let's see net profit margin by comparison of the basket vendor to the industry average. So 2005, 2006, 2007, but we are currently talking about 2007 year. In this basket vendor, basket vendor have 4.1%, and other hand side you see the industry has been on 8.2%, so it's a huge difference you can see. So basket vendors has a poor net profit margin. Yes, we are seeing that there is a difference of 50% on it. So they also been given us the trend analysis of the net profit margin. So you've been seeing in the graph on horizontal axis the years again 2005, 2006 and 2007, and we currently talking about the 2007, right? So being focused on this and on vertical axis you see the ratio values in percentages. The blue line shows the basket vendor and the red line shows the industry average. But if we talking about only 2007, we've been seeing 2007 being low from the industry average. So the next ratio for profitability ratio is return on investment, right? Return on investment is the net profit after tax divided by the total asset. This ratio being so-called income statement and balance sheet ratio because we see the total asset is your balance sheet item and your net profit after tax is your income statement item for basket vendor for the year 2007. So the value being taken for the net profit after tax is $91 and divided by 2160 is your total assets. So we can get the answer which is 0.042. So what it indicates the profitability on the assets of the firm after all expenses and taxes. Yes, you know that the ratio can be net profit after taxes, right? So what does this answer indicate? So now we can check by comparing it to the industry average and we see where the basket vendors stand. So let's see return on investment being comparison to the industry average. So left hand side you've been seeing that the years 2005, 2006 and 2007, and we are currently talking about the year 2007. So in this year basket wonder has answered 4.2%, and on the other hand side you can see the industry average is 9.8%. So again being there is a huge difference 4.2 and 9.8. So basket vendors have a poor return on investment. Like that's why we are seeing yes they have a poor return because they are 4.2% and on the other hand side industry average is 9.8%, right? So they've also given us a trend analysis of return on investment. The graph being showing you the comparison between basket and the industry average. So on horizontal axis they have been taken the year 2005, 2006 and 2007, and on the other hand side on vertical axis being the ratio value being given. So this clearly shows that basket vendors being so below than the industry average. You see this blue line is for basket vendor and the red one is for industry average. So yes, in 2007 we see there is a huge difference between basket vendor and industry average. So the next ratio for profitability ratio is the return on equity. So also being so called the income statement and balance sheet ratio. So we see net profit after tax divided by shareholders equity. Yes, we know that shareholders equity being balance sheet item and net profit after tax is being also income statement item for the basket vendor for the year 2007. So the value being taken are $91 for net profit after tax divided by $1139 for the shareholders equity, and we get the answer 0.08. So what does this 0.08 indicate? Yes, this indicates the profitability to the shareholders of the firm, that is after all expenses and taxes, because the ratio being shows that net profit after taxes, right? So now let's see by comparison of this ratio to the industry average. So return on equity, we been comparing basket vendor with the industry average. So 2005, 6 and 7 that have been given, but we are currently talking about the year 2007 only. In 2007 we see basket vendor has 8% and on the other hand side industry average has 17.9%. It's a huge difference. So there we see that basket vendor has a poor return on equity as compared to the industry average. So in this slide they have given us a trend analysis of the return on equity with the industry average. So in this graph you can clearly see on horizontal axis the years are given 2005, 2006 and 2007, and while on vertical axis the ratio values being given in percentages. So we be clearly seeing that the blue line is so below than the red one. So the red one shows the industry average and the blue one shows the basket vendor. So in 2007, yes, there is a huge difference between the both. So these are the related links you can visit to watch the video on the YouTube channel, and you can also visit the related links to get more knowledge about this related topic. Thank you from my side and stay blessed.